Welcome to TalkTickers. You're joining us for a deep dive into the latest earnings calls, and today we are unpacking the Q1 2025 results for this company.
That's right, and kicking things off, it looks like, well, a pretty positive quarter overall. Strong performance, some key achievements highlighted.
Definitely positive. I mean, just look at the stock performance, up significantly, 33%. That's quite a jump.
It really is. And they've backed that up with substantial dividend payments, too. Over $9 billion returned to shareholders.
Which feeds right into that total shareholder return, the TSR, sitting at a very healthy 52%. Really speaks volumes.
Absolutely. And this isn't just a flash in the pan, is it? They're flagging 7 consecutive quarters now of stable, organic, and sustainable growth.
7 straight quarters. And hitting their highest result ever on a like-for-like basis, which, strips out things like big acquisitions or disposals to give a clearer picture.
Exactly. Comparing apples to apples. And profitability looks solid, too. Group profitability holding strong, with both EBITDA and net income up 2% year on year.
Okay, so EBITDA and net income both ticking up. That EBITDA figure, that's a key one for their operating profitability, right? Before some of the accounting stuff kicks in.
Precisely. It suggests the core engine is running well. And you can see the efficiency efforts, too. Optimization of cash costs seems pretty evident in the results.
Yeah, they seem to be getting a handle on costs, plus they're making progress on, well, both sides of the coin. Financial sustainability and environmental sustainability, that's increasingly important.
Very much so. Another interesting point there reported, and ordinary results are now aligned. That makes things a bit clearer, more transparent, perhaps.
Yeah, it definitely helps with clarity. And looking forward, they've confirmed their 2025 guidance.
They have. And that full-year BDA target, it's aiming 30% higher than the result they got back in 2022. That's quite ambitious, signals confidence.
A 30% jump from 2022 levels. Okay, so that sets the stage. Let's maybe dig a bit deeper into the strategic moves behind these numbers.
Sounds good. A key theme seems to be this proactive reshaping of how they allocate capital. They're not just letting things run, they're actively managing it.
Right, and tied to that, the efficiency improvements across all the countries they're in. They mentioned hitting 60% of an improved target already.
Which is significant progress. That internal focus is, well, it's crucial for keeping growth sustainable, isn't it?
It really is. They've also done work to reduce exposure to macro volatility, broader economic swings.
Yeah, that 90% figure for BDA secured over the pump period, as they call it. That's a serious amount of hedging, provides quite a buffer against market turbulence.
A significant safety net. And it seems they're being more selective about their customer base, too.
Yes, focusing on the most valuable clients, actively trying to reduce financial and industrial risk there. It's about quality over just quantity, moving towards a more stable revenue stream.
Makes sense. What about the capital structure itself?
Optimized is the word they used. It sounds like they've strengthened the balance sheet, made the group financially stronger, and that prepares them for, value creative opportunities.
Like the share buyback program they've already started in Spain?
Exactly. That's one example. Repurchasing shares can often signal confidence and potentially boost the value for remaining shareholders.
Okay. And this shift they mentioned, from greenfield to brownfield, building new versus redeveloping existing assets.
Yeah, they seem to be a first mover in making that shift more pronounced, applying strict capital allocation criteria. It seems like a more cautious approach, maybe faster returns in the current climate.
Potentially less risky than starting from scratch every time. And interesting comments on emerging markets, too.
Right. They apparently sold assets there when prices were high. Now they feel well-positioned to perhaps capitalize on new opportunities as they come up. Show some market timing, maybe foresight.
Strategic positioning. And this allows for value accretive asset swaps. What's that about?
Essentially, trading assets in a way that improves their overall risk-return profile. It's about optimizing the portfolio to strengthen profitability and the balance sheet.
Okay, so constantly tweaking the portfolio for better results. Let's pivot then to the specific Q1 2025 performance. How did that stack up against their plans?
Well, it seems they're delivering on those strategic pillars they laid out at their Capital Market Day. The execution looks consistent.
And the results themselves. Solid and predictable, they said. Both operating KPIs like production, customer numbers, and the financial performance.
Yeah, that predictability is something investors often look for, isn't it? Suggests stability. And again, that optimization of cash cost is visible. The efficiency drive continues.
And the sustainability angle keeps coming up. Strong financials, but also growing that greener generation portfolio. Almost 70 GW of emission-free capacity now.
That's a huge number. Reflects that broader shift we're seeing everywhere.
Yeah.
And importantly, this quarter's growth was organic.
Meaning from existing operations, not boosted by, say, a big acquisition or some one-off gain.
Exactly. Which ties back to why those reported and ordinary results are now aligned. It's a cleaner picture of underlying performance.
All right. So how are they managing risk? We talked about hedging, but what about investment choices to limit volatility?
Well, their Q1 investment seems to follow the capital allocation guidelines from their industrial plan. No surprises there.
And where's that money going?
A big chunk towards networks, mainly in Italy. They're focused on grid resilience, improving quality. It's a long-term play.
Makes sense. Infrastructure is key. And geographically.
Heavily weighted about 80% towards what they call high-rated countries. Places with strong credit ratings where they have an integrated presence, and crucially, less exposure to tricky tariff issues.
So deliberately playing it safer geographically. What about those tariff issues specifically?
They have framework agreements in place to limit the blowback from any tariff turmoil on network investments. They see minimal impact coming from outside Europe and actually zero from the U.S. on this front.
Zero from the U.S., okay? That's quite specific. And inflation. How are they handling cost increases, especially for renewables?
The regulatory frameworks they operate under apparently provide a kind of natural protection against inflation and cost hikes for new renewable capacity.
Yeah.
That's a built-in advantage right now.
That is definitely an advantage. They also mentioned squeezing the greenfield pipeline, pulling back on brand new projects.
Yeah, proactively scaling that back to limit exposure to current uncertainties. And interestingly, they're using the capital freed up by that slowdown to help finance that Spanish hydro brownfield acquisition we mentioned.
So flexing the capital deployment based on the environment, smart. And U.S. investment overall seems quite limited.
Very limited. Only 5% of their total $43 billion plat plan, and no new U.S. capacity plan for 2025 at all. Seems like a cautious stance there for now.
And they're anticipating opportunities in brownfield because of the global situation, maybe picking up assets from others?
That seems to be the expectation, positioning themselves to potentially grab advantageous deals if they pop up due to market stress.
Okay, let's break down the performance by region. How did Spain do?
Spain looks strong. EBITDA increased, driven by their integrated business. They had higher production and better energy management, focusing on value, not just pushing volume.
Value over volume, okay. North America.
Strong year-on-year performance there too, mainly thanks to new capacity that came online in 2024. So reaping the benefits of past investments.
And Latin America, it sounded a bit more mixed.
It was flat year-on-year on a like-for-like basis. But that was heavily dragged down by currency devaluation, especially the Brazilian real.
Ah, the FX impact. So if you strip that out.
If you exclude the currency hits, EBITDA would actually have increased. So the underlying business wasn't the issue there. It was macro factors.
Got it. And Italy, sounded like there was a specific story there with retail.
Yeah, the results were impacted because they've completed this repositioning of the retail business. Prices are lower now.
Which you'd think would hurt results.
Right. But the flip side is their monthly churn rate customers leaving has halved. So the efforts to engage customers and build loyalty seem to be working. They expect BTDA there to progress steadily through the year.
Halved the churn rate, that's significant. Shows the repositioning might be paying off long-term, even if it impacts short-term pricing. Okay, what about overall capital allocation and operating metrics?
Well, that 70 GW of non-emitting capacity led to a 1 TWH growth in CO2-free generation. They're now at 84% of total production being emission-free.
84%, that's substantial progress towards decarbonization.
Definitely. They've also reshaped energy management in their home market, and the supply business added 100,000 customers year on year, again focusing on those valuable segments.
And the grid investment
Boosted their regulated asset base, the RAB, to $46 billion, underscores how important those networks are.
Okay, let's dive into the financials a bit more. ADDA was almost $6 billion.
Yeah, another profitability measure, driven by stronger grid performance in Italy, plus higher results in the integrated business in Spain and elsewhere.
Net income up 2%, like for like, as we mentioned. What about debt?
The key ratio, net debt to BTDA, actually decreased to 2.5 times. So leverage is improving. The balance sheet looks healthier.
Lower leverage, good sign. How did the different business units contribute to that ABDA? Grids?
Grids ABDA was up 4%. Italy did well there, thanks to higher spending and the new remuneration framework. Spain was flat, focusing on adapting to their new regulations. Distributed energy was almost flat. Volume and tariff indexation helped, but CPI and currency impacts offset most of it.
So mostly stable to positive on the grid side. And the integrated business, that was 3.8 billion EBITDA.
Correct. Within that, renewables were up because of new capacity, even with lower resource availability, like less wind or sun, perhaps. Flexible generation and commodity management were pretty flat.
And retail.
That reflected the repositioning in Italy we discussed, partially offset by Spain. They expect linear performance for the rest of 2025 from that whole integrated segment.
Okay. And that shift in Italy from volume to an integrated process, can you elaborate a bit?
Sure. They're trying to maximize resources, focusing on residential and small-medium business customers. They're matching their renewable generation directly with retail sales and using financial hedging to add value on top.
So a more sophisticated approach than just selling kilowatt hours.
Seems like it. And most of their Italian customer contracts for 2025 are fixed price, which gives them revenue certainty. They're already working on contracts for 26 and 27.
And their own generation is hedged too.
Fully hedged for 2025, significantly hedged for the years after, really locking things down against price swings.
Okay. Ordinary net income was $2 billion. Any major moving parts below the operating line?
D&A depreciation and amortization was up slightly. Financial expenses rose a bit. Lower debt charges helped, but that was offset by lower income from financial receivables and less contribution from associates. Taxes and minorities were stable.
And importantly, reported net income tracked ordinary net income, up 10% like for like.
Right, that alignment we talked about. Shows underlying growth without major one-offs distorting things.
What about cash flow? FFO?
Funds from operations look strong, $4.5 billion adjusted. The cash generated in Q1 actually covered their organic capex and the Spanish hydro acquisition. So positive free cash flow.
That's healthy. What happened with net debt then? It stayed about flat.
Almost flat compared to the end of 2024. They issued a new hybrid bond and repaid some old ones, paid out $2.5 billion in dividends, but the strong cash flow generation basically balanced things out.
Okay, solid financial footing then. So looking ahead, guidance and outlook.
The solid Q1, driven by organic recurring performance, gives them good visibility for the coming quarters, they feel.
And they plan to keep using their financial flexibility for capital allocation.
Yes, leveraging that for both brownfield opportunities and their greenfield pipeline, sticking to their strategic priorities.
And all this supports the full year targets they've already set out.
Strongly supports them, according to the commentary. They seem confident.
And for shareholders, what's the message?
Appealing remuneration expected. They pointed to the current dividend policy and, importantly, that new share buyback program they're proposing on May 22nd.
Yes, the buyback. So Q&A highlights often give extra color. Did anything jump out on capital deployment priorities?
Yeah, they seem to rank it first, organic growth in networks, especially Italy and potentially Brazil concession renewals, maybe more Spain capex if regulations are supportive, then brownfield renewables in high-rated countries, and then the share buyback program.
Networks first, then brownfield renewables, then buyback. Clear hierarchy. Any updates on those Italian grid concession renewals?
No significant updates, apparently. Discussions are ongoing, focusing on technical and operational stuff. No red flags on the timeline right now.
Okay. And the buyback Spanish one started, Italian one waiting for approval on May 22nd.
That's the plan. Updates on the size and execution of the Italian one will follow that meeting.
What about strategy in emerging markets now? Less focus on new big builds.
Yeah, seems the focus there is more on restoring value from existing assets and rationalizing anything that's not profitable, optimizing what they have.
And the U.S., any impact from potential policy changes? They seemed quite relaxed about it.
They did. They said the potential impact is negligible. They'd already considered risks. They have zero new capacity planned for 2025 anyway, and existing production mostly has long-term contracts. Plus, they see brownfield opportunities there too, longer term.
So minimal near-term risk from the U.S. How does Q1 performance specifically support the full-year guidance? Any key drivers?
Key things seem to be normalization of commodity hedging profits after a strong Q1, maybe a slight reduction in Italian retail contribution seasonally, but the base is repositioned, and steady linear evolution expected from networks. Latin America grids expected to perform better going forward too.
Okay, what about hydro production? Always variable?
Expected to align with historical averages in Italy and Spain. Colombia Hydro actually expected to be positive. Overall, LATAM production seems in line with their plan.
Good to hear. Churn rates. Italy halved. Expected to stay lower. Spain.
Italy expected to stay lower than last year, yes. Competition is still strong in Spain, though. Churn is growing in the broader market there, so they're focused on value management and retention.
competition heating up across Europe generally?
Seems so. Market liberalization, new entrants. Their response is focusing on innovation and pricing and services, building loyalty beyond just basic price promotions.
Are they comfortable hitting the 2025 EBITDA target for retail in Italy, given the repositioning?
Yes, sounded comfortable. The customer base for 2025 is apparently fully contracted and priced already.
What about thermal generation and trading? Strong Q1 despite lower volumes.
Yeah, driven by profits from hedging their commodity portfolio and sales activities. Q1 is often stronger there, with some normalization expected later in the year.
And finally, FX risk. They mentioned the LATAM impact. Any big worries for the full year guidance?
Limited expected impact, they said. Non-euro regions aren't a huge weight in the consolidated results. Their sensitivity analysis shows only a small impact, even with significant currency swings.
Okay, so wrapping up the deep dive then. It feels like a company that's really focused on execution.
Yeah, executing the strategy, driving efficiency, and definitely keeping shareholder returns in mind.
That emphasis on brownfield and the integrated model seems like a smart way to handle opportunities and manage risk right now.
It does feel proactive.
Yeah.
And confirming guidance, planning another buyback, those are generally signals investors like to see. Could boost confidence.
Though, as always, you need to look at the details, right? The currency headwinds in LATAM, the retail story in Italy, that context is important.
Absolutely. And keeping an eye on those regulatory frameworks in Italy and Spain will be key for future network growth.
Definitely. Okay, let's shift gears slightly to our This Is Not Financial Advices segment. Time for some outrageous but plausible trade ideas based on what we've heard.
All right, let's speculate. Idea one. Given the huge emphasis on renewables, hitting those capacity targets, maybe think about the supply chain. How about a long position in, say, a major European manufacturer of subsea power cables?
Ooh, interesting angle. As they build more offshore wind, for example, the demand for those specialized high-voltage cables to bring the power ashore could really ramp up, playing the infrastructure behind the renewables.
Exactly. It's a play on the sector tailwinds they highlighted. Okay, outrageous idea number two.
How about this? They explicitly mention anticipating brownfield opportunities from the global scenario and wanting to acquire them. They're financially strong. Maybe a small speculative position in a fund that specializes in buying distressed energy assets in Europe.
A distressed asset fund. Yeah, if this company or others like them start picking up assets on the cheap from stressed sellers, a fund focused on that area could potentially see some outsized returns. Highly speculative, of course.
Highly speculative indeed. And just to be absolutely crystal clear, these are just thought experiments, folks. Purely for informational and entertainment purposes. They are not financial advice.
Absolutely not. Always do your own thorough research, consider your own circumstances before making any investment decisions. Dig into the company reports yourself.
Couldn't agree more. So in conclusion, today's earnings call revealed, I think, a company delivering on its promises, demonstrating financial strength.
The focus on efficiency, smart capital allocation, and shareholder returns gives you a pretty clear picture of their direction. Lots of valuable insights there.
We definitely encourage you to explore the details further and think about how these insights fit into your own view of the market and your investment framework. Thanks for tuning in to TalkTickers.